Sponsored by Chartered Financial Strategies. You are now watching Tax Bytes.
Hello and welcome to another edition of Tax Bytes. And today we're going to discuss, kind of in a conceptual way, how much money can we really expect to collect from tax revenues as a federal government. And if you remember, we would collect $3.5 trillion dollars, and there is a measure that is commonly tracked by economists and others, is how much revenue is collected via tax as a percent of our gross domestic product. And for those who don't know, gross domestic product is basically the size of our economy, all goods and services produced and traded within the U.S. borders in our economy. And think of roughly $22 trillion, as we're going to say, in today's terms, is what our economy operates on. And this information here kind of measures all the way back, I mean, even all back to the 1930s, as what was our tax revenues as a percent of GDP in that year. And this is done by the Fed, the St. Louis Fed, Federal Bank, Federal Reserve rather, produces this chart, updates it, I think, every October for the prior year. And what you're going to see is there's this fluctuation with some anomalies, but fluctuation. And I kind of picked this 1950s forward because there's a Depression era period here. There's a World War II going on that can distort tax policy and revenue collections related to those issues. So in a more modern view, you can look at from 1950-ish forward, and you're floating between this upper teens and mid-teens, like 15%, is where you're floating between, like even 17, 18-ish as a percent of GDP. And so if you're to look at that, that's kind of a guide as to a cap. So GDP, our economy size, is going to be as much of a driver of our collection of revenue as maybe policy might be. Just top line. Uh, People can argue some minutia beneath that, but as a whole, 15, 16, 17, 18 is what you're going to collect in revenues based on your GDP. And that's kind of a cap, or at least a guideline, is can you get more out of your tax policy, maybe. The reason I bring that up is you'll look and say, okay, I meant to put this on here already. I will go ahead and bring it back up. But we have the U.S. debt clock here, and you're going to see that roughly we're in that 16%. And if you were to do the math and say, well, let's take that even to 20, or whatever, 15, 20. So what is, if our GDP is 22, do 1.715. Times that by, we'll go 20. That's 4.3. Even if you maxed it beyond what that trend is, you're still going to be a shortfall. And what I'm trying to get across to you here is we probably don't have a way to tax our way out of this fiscal situation, of this debt. To tax your way out would require us, let's just say, you're going to pay some amount each year. You're going to have to either collect 4.5 trillion a year, which means your GDP at 21 point, where are we at? 714 times that by 0.22. There. Now that little residual, roughly $200 billion, we're going to say, is that going to be enough to pay down the national? It would stop the bleeding, but is it really going to pay down? It's not even going to cover our interest, quite honestly. So when you start getting into this, okay, I need to start putting a tax policy in that's going to be what? There we go again, 21.714 times, let's go 0.25. Was it 256, almost 26. And $5.6 trillion. We're into a realm of taxation that's much more burdensome than we probably had in the last 100 years. That becomes a very different world of economic policy. So the point I'm trying to get is we don't probably have an ability to tax our way out of this, to collect more money to stop this effort. We probably have to look at what we're spending on. That's a debate. Everyone can debate that all they want, but when you're spending this much more than you're taking in, you're kind of at your maximum of revenue collection. You got to start looking to the expense side and saying, what do we need to cut? I'm not going to go in great detail at this point in time, but you're looking at what's really a spending issue more than a tax revenue issue in a nutshell. Hope that's a little clear. I'm not sure if it comes across so well sometimes. I think in my own head better than I do outside. So, but collecting 3.5 trillion, spending 4.5 trillion, you need to probably collect 20, would we say 25, 26% of GDP as a tax. Don't think that's really possible when you look at that trend. Going back into this trend here, there isn't in modern taxation history a 26% tax revenue collection. So it seems outside, or at least you're breaking into uncharted territories economically speaking. So that's just a learning to understand and take away, put in your back pocket of knowledge, and understand that at a top line view. So hope this was something of education. I don't know. It's hopefully it was, and hope you enjoyed the video today. And thank you for joining Tax Bytes. Have a good day.